Okay, Bloomberg TV.
Thank you, Mr. Chairman. I want to ask some timing questions here. First, on the whatever it is, QE or not QE, you talk in the press release about increase over coming months. Is there a timetable for that? How long are we talking about? $700 billion, obviously, over 2 months is a lot different from $700 billion over the course of a year. And do you have a date where you would reevaluate and perhaps add more or end the program? And the same with the interest rate cut to zero. How long do you think that might last? And would you be inclined to quickly go back to a higher level, the 100 or basis points or more that you cut it from? Or would you anticipate that this will be a long, slow process going back?
Okay, so sorry.
Mike, can you ask your question?
What was it again? What was the question again? Just tell me that I can't read my writing.
I was asking about timing. How long a period are we talking about for the QE purchases, and how long do you anticipate keeping rates low, and how fast we can bring them back up again?
Okay, sorry. So that's the incoming months language. Let me tell you what we were doing there. So there's no monthly cap here. There's no weekly cap. The desk is going to go out and it's going to buy at a strong rate that we think will restore market function, restore liquidity as quickly as it can be restored. And that language is open-ended, and it's meant to send a signal to the market that you know we're not going to be bound by, for example, $60 billion a month or anything like that. We're going to go in strong, starting tomorrow. And we're going to buy across the curve, and we're going to buy MBS, and we're really going to use our tools.
That should affect
to do what
TLT.
we need to do here, which is restore these important markets to normal function. So that's really what that is.
They have to fix TLT.
As far as the policy rate, what we said is that we will maintain the rate at this level until we're confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals. So you can see that's the test we've written down, and if you look at it, you'll see that some things have to happen before we would consider. We'd have to become confident of that the economy has weathered these recent events, and also is on track to achieve our maximum employment and price stability goals. So that's a test we'll be looking at, and I think it suggests that we're going to be watching and willing to be patient, certainly.
Okay, we're going to go to the Associated Press.
Hi, it's Christopher Gaber at AP. In 2008, you had a lot of coordination between the White House at that time, the Fed, the Treasury, Bernanke doing a lot of things with Paulson and so forth. Today the White House had its press conference at 5, and you guys are doing something a little separate. Is there, do you think it would be more helpful to markets, perhaps, and the broader economy to have a more coordinated response? Is that something we might look for in the future?
Well, I would say this, we have different tools. I think we do actually work pretty closely with the Treasury Department and cooperate with them on things with clear lines of delineation. For example, the Treasury Department has authority over fiscal policy. That's not our job. It's their job with other parts of the administration. It's just like that for us with monetary policy. We have sole responsibility for monetary policy and strong instructions from Congress to conduct it in an independent, non-political way. So those two things are one for each of us. But in the middle there are areas where we can cooperate. And also there's a long history. You would want the finance ministry and the Treasury to be talking in every major economy in the world. You would want them to be regularly exchanging information, professional relationships, not just at the chair to Treasury Secretary level, but also through the organization. For example, the New York Fed is the Treasury's agent, fiscal agent, as you know. So there's a lot that goes into debt management and the issuance of debt, which happens at the New York Fed. So I think we do actually, we have professional, good working relationships up and down the chain there. And, that seems to be. And there's also quite a lot of coordination in other respects with, of course, with foreign central banks, but you didn't ask about that.
Okay, we're going to go to the Washington Post. Washington Post, are you there?
Hey, sorry, I'm here. Hi, Chair Powell. 2 questions this evening. First, have you personally been tested for coronavirus, and are you working from home? If you could shed some light on the precautions you're taking. And second, do you believe the Fed has sufficient tools at the moment, or are you seeking congressional action to expand your tool set?
So I feel fine. I feel very well, and there's no reason for me to be tested. We are observing, we're trying to model good behavior here, so we're observing quite a lot of teleworking, and also we're not having a lot of big crowded meetings. We're not having any big crowded meetings, so we're trying to observe all of the things that the professionals tell us to do. I do expect to do some teleworking because I want to model that it's okay for other people to do so. In fact, it's important for them to do so, so I will do that. In terms of our toolkit, let me say first that I think we do have plenty of space to adjust our policy. I mentioned our liquidity tools. We have a lot of power in our liquidity tools, and as I mentioned, we're prepared to use them. In addition, we've got plenty of space left to offer forward guidance, asset purchases, and adjust those policies. So I think we do have room. We have not at all made a decision to request further tools or authorities from Congress. No, we have not made that decision. It is not something we're actively considering right now.
Okay, we'll go to the New York Times.
Hi, Chair Powell. It's Gina Smilik at the New York Times. Thanks for taking our questions. I'm just curious, obviously you held this meeting in lieu of your meeting later this week. Will you still release a summary of economic projections? And if not, how should we understand how you guys are thinking about the economy as the coronavirus shapes up?
We've lost Powell.
So, why no? I guess you're asking why no SEP and what's our forecast. So, a couple reasons we didn't do an SEP. First, we decided on Thursday to move the meeting up by 3 days to today, and that's before the SEPs are generally filed. They hadn't been filled out, and we spent our time focused on getting ready to make these announcements. Second, and a number of FOMC participants had already reached out to make the point that the economic outlook is evolving on a daily basis, and it really is depending heavily on the spread of the virus and the measures taken to affect it and how long that goes on, and that is just not something that's knowable. So actually, writing down a forecast in that circumstance didn't seem to be useful, and in fact, it could have been more of an obstacle to clear communication than a help. I do expect that we'll return to the regular quarterly cycle in June, however. In terms of the forecast, so as I mentioned, we see the U.S. economy starting out strong from a strong position. Different as we talk through it today, people have a range of perspectives on the way the year is going to go. But I think there's a pretty broad sense that the second quarter will be a weak quarter with probably output declining a bit. After that, it becomes hard to say, what will happen in the third and fourth quarters and thereafter. And it's going to depend, again, on the path of the virus. So the thing we do know is that we'll be here doing our job.
Oh, they know a lot more, baby.
And,
Bro,
and
this
there
is
to do
wild.
what we can when the recovery comes to make it as vigorous as possible.
Okay, now we'll go to Bloomberg News.
Hi, Chair Powell. Craig Torres at Bloomberg News. You say the path of the economy more or less depends on the path of the virus. How important is fiscal policy now in determining whether this sudden stop in activity is long or short, and of high human consequence or little human consequence? And second, can you talk a little bit about what's on your dashboard for economic and financial indicators that you're going to be watching day to day? I know Vice Chair Clarida said that we should start seeing the data show up in April? What are you going to be watching, and what should we be watching?
So in terms of fiscal policy, I think in the first instance, and you're seeing some of this now, the thing that fiscal policy and really only fiscal policy can do is reach out directly to affected industries, affected workers, and we've seen some of that. So that's an important job for fiscal policy. More broadly, after that, there's the question of broader fiscal stimulus, and I think that'll depend on the path of the economy. I think there's such a wide range of possibilities here that it's very hard to predict, but there could certainly be a need for that. Your second question was, what was your second question?
Yeah, it was on what indicators you're going to be looking at, financial and real.
Well, I think in the very near term, going to be looking at the Treasury market function. We're really going to be looking to see that financial markets are returning to more liquid, more normal functioning. That is an essential part of our job. That is actually, that is the thing that central banks were originally designed to do, was to provide liquidity to financial systems in stress. So we take that job very seriously. It's probably the most important thing we're doing now is that. So we'll be watching that, and we'll be prepared to use our tools when and as appropriate to address, to support market functioning and really to support the flow of credit to households and businesses. Those are the things I'll be looking at. In terms of economic data, I think it's just so early. We're really looking, the economic data will follow the data on the spread of the virus. I think what happens during the spread of the virus is probably not going to tell you a lot about where the economy will be in 6 months. It's going to be, because you probably have a bad quarter in the second quarter, but if things get better in the third quarter, that probably won't matter so much. We may be able to come back from that if it lasts longer. So that's really what I'll be looking for is what is going to be the spread of the virus and what's the path it's going to take and what are the effects on the economy.
Okay, we'll go to
oil
NBC
below
News
30.
now.
That's fucked.
Hi, Chair Powell. This is David Gura from NBC News, and a lot of good questions here, so I'll turn to one that's more philosophical in nature. And you've talked a bit about the disruptions from the coronavirus outbreak and having lower economic activity for a period of time. I'm reckoning with the fact that my kid's going to be out of school until April 20th at the earliest, so we're feeling all of it very, very acutely. But I wonder if you could just give us your perspective on the time horizon here and put that into some broader context, how you look at this and how anomalous this thing is with which you and your colleagues are going to have to reckon. That's my first question. The second is, we've seen a variety of tools here deployed over these last few weeks, and the market, which I know is something that you pay at least minimal attention to, has reacted negatively to some of that. What do you make of that? Going back to the question that was asked earlier about the toolbox and what's left in it, rates are low. Does that provoke any apprehension, any nervousness on your part that there are fewer tools therein?
Nah, we're going to go negative, bro.
So I guess your first question is how do we think about the time for this thing? And the truth is we just don't know. And the experts we talk to will say that they don't know and that it's in fact unknowable. It's going to depend on a number of things. First, it's the measures that we take to with the social distancing and all the things businesses and schools and everyone's doing now. And that'll depend to some extent on how compliant people are. You can see that some countries have been able to, through aggressive measures and really high compliance, have been able to bend the curve and do that. And whether we succeed or that's really the question. And I wouldn't. I'll resist the impulse to guess. I really don't know what that will be. In terms of the toolbox, as I mentioned, we think we have plenty of policy space left, plenty of power left in our tools. And I would point in particular to the liquidity tools. That, I think, is right now the most important thing that we're doing. Our interest rates will matter, cuts will matter now to borrowers who will get some relief from our cuts, but they'll matter a lot more when the economy begins to recover. But in the forefront now are the liquidity tools and getting that job done well. In addition, as I mentioned, we have room to provide forward guidance, to do more asset purchases. I think there is room for us to do what we need to do. I would just close, though, by saying that, typically fiscal policy does play a major role when there are downturns. You've seen that in many past downturns, and that's beyond just the automatic stabilizers. Sometimes fiscal policy comes in on a discretionary basis, and that will probably need to be the case here as well.
Okay, we'll go to Politico.
Hi, Victoria Guida with Politico. Thanks for doing the call. I just wanted to ask, do you see a bigger role here for the Financial Stability Oversight Council? With all the stress that's showing up in different markets, do you see risks to financial stability rising? Do you think there are some activities that FSOC might want to crack down on? And are you confident that there aren't any non-banks that are systemically important?
So FSOC is really something that the Treasury Secretary chairs, and it's a big group. It's got a lot of people. I think it serves a good purpose. But you should know that we are, of course, in regular contact with the other regulatory agencies, constantly talking about what's going on in markets. There's a lot of information and conversation on an ongoing basis there, I would say. So, and the same is true with our central bank contacts around the world. We're in ongoing contact with all the major central banks around the world, talking about what's going on. We're having group calls. We're calling one-on-one. So there's quite a lot of information being exchanged there. Then your question was non-bank SIFIs. Again, that's a judgment for the FSOC. I'm comfortable with the actions that we've taken, and if we do identify a systemically important non-bank institution, then we wouldn't hesitate to designate it. But although I guess now we're working more on activities, but we do still have the power to designate institutions. So
Financial stability risk, are those rising?
So the question was?
Are risks to financial stability rising, given all the stress that's happening in financial markets?
Well, yes, I would say, that's something that happens when markets are as volatile as they are. When you're having these big market movements while markets are trying to understand what's going on. They're trying to reach a view in high uncertainty, and that's why you see lots and lots of volatility. I think there's more risk to financial stability in an era like that than there is when things are really placid. And, we're going home at 4 o'clock and kind of bored over here. That's not the case right now. So financial stability, I would say those risks do rise at a time of high volatility, particularly a time where we're presented with a challenge that is kind of unique, really. It's not something we've all done before. I also want to add, though, that we're strongly focused on financial stability. We monitor it carefully. We've built a very resilient financial system. The banks are highly capitalized, lots of liquidity, much better at understanding and managing their risks. They're resilient to stress. So our financial stability focus, our focus on an event like this over the last 10 years will pay dividends in the sense that you have a much more resilient financial system than you've had before.
Okay, we'll go to market news.
Hi, this is Jeannie Young. I wanted to ask, a few days ago, the Open Markets Desk expanded its term repo operations, but the take-up was a bit low. Did you have any takeaway from that? Did that indicate to you that the repos were not working as you had envisioned it? Or was there something else that you learned from that? Thank you.
Thank you. Yes, so we saw, and everyone saw, that liquidity had become very strained in Treasury and MBS markets.
Tell me more, Powell.
And,
Tell me more.
We decided to offer very large quantities of term and overnight repo to address that. That makes it easier to finance the purchase of of Treasuries and MBS. So we did that, and as you pointed out, the take-up was not as high as many had expected. And I think we did learn something from that. We thought that was worth doing, and what we learned was
Make sure you
that
watch the watch list.
we needed to go direct here rather than trying to intermediate through the dealers. And so we realized at that point that we would need to actually purchase securities for our portfolio. So we did that on Friday. We bought, the next day, Friday, we went in and we bought across the curve. And we bought, I think, $37 billion worth of securities. And then we saw what happened with that. We saw that market function improved a little bit, but still it wasn't what we needed. And that's why we brought together the full FOMC and had our meeting this afternoon and announced these measures this evening, which are strong measures with the broad support of the committee to provide really substantial amounts of liquidity. And I think you can see us working through different solutions and finding the one that we think really will work, and then acting quite vigorously, quite aggressively tonight to implement it.
Okay, we're going to go to Reuters for the last question.
Thanks, Chair Powell.
One question.
Two things if I could. Could you describe any discussions you've had in coordination with the major banks, this whole talk of drawing down liquidity, drawing down capital buffers? How far can they draw it down? How much do you think they can put now out to customer finance? Did you get explicit agreements for them that this will go to customer finance and not something else? And then secondly, is there any discussion yet of using the 13.3 powers of the Fed to do some sort of direct lending facility?
We've given broad general guidance to the banks. We'd like them to use their buffers to provide, to provide loans and also to work with their borrowers. As you can see, we're providing a lot of guidance to them across a wide range, and they're saying they have every intention of doing that. That's good to hear, and so we'll see how that works out. There are a lot of discussions going on, and we hear the banks saying that's exactly what they're going to do. So that's a good thing. We have nothing to announce on 13.3 powers, but of course that's part of our playbook in any situation like this. So as I said, we're prepared to.
Oh, come on, Yalla, what you prepared to do? Oh, come on. Come on.
Yeah, so that's a good thing. We have nothing to announce on 13.3 powers, but of course that's part of our playbook in any situation like this. So as I said, we're prepared to.
Oh, why every time he's prepared to do something?
Yeah, so that's a good thing. We have nothing to announce on 13.3 powers, but of course that's part of our playbook in any situation like this. So as I said, we're prepared to.
Why every time he says prepared? What? Come on, every single time he said prepared. What are you prepared to do? Tell me.
So that's a good thing.
Yeah, it's a good thing, huh?
We have nothing to announce on 13.3 powers, but of course that's part of our playbook in any situation like this. So as I said, we're prepared to.
Yeah, bro, come on.
Yeah. So
all right, hold on, we gotta.
We're.
No. Come on, news and events, calendar. Where is it? Monday, and no unexpected. See, they had nothing planned here. Come on, where is this? How do we get this news and events? Come on, perfect. Come on, give me this one.
So that's a good thing.
No.
We have nothing to announce on 13.3 powers, but of course that's part of our playbook in any situation like.
Bro, this is crazy. Yeah, it's a loop. Hey, that's me. Well, make sure you guys watch the watch list. Second link here. We have a lot to talk about here. This is wild. Let's see. Bloomberg Live. I know Bloomberg have it. Not the candidate. Global Financial. Let's see. Global Financial. Where is it, Jerome? No, they don't have Jerome. Where is Jerome? This is crazy, you guys. I think I'm only one, Jerome Powell. I think we're the only one. We're the only one here. Bro, that's crazy. Bro, that was an all audio interview too. This is, listen at 6:30 p.m. Wait, what? I think they push it back. It's already 6:30 p.m., right? No, it's 7:30 almost. So I guess that was the last question, but man, are you guys ready? Do you realize what you're witnessing right here? So there's a few things we need to talk about. One, oil is hanging out at $30, drop right below there. Gold is gapped up right here /ZN. This is the 10-year treasury. So this is pretty much the futures version of TLT. Then the USD JAPI, we should also watch the USD CNY. And then now Dow futures have been halted, limit down. So where's Young Money? There it is. Dow is down 1,041 points. They've halted it at 4.56%. So that means it cannot, they've halted. I mean, dude, they're not even letting it trade limit up. So it wasn't even a limit down. That was just a straight halt, and that was instantly as it opened. So this is insane. So watch the watch list. Second link, I put the watch list out early for this, and this is, the news came out as I was filming the watch list. I was shocked. I mean, I'm still kind of processing this right now. If you guys don't realize, the fact that once it happened last week, that was the first time in 20 years, but you have it here now. But the Fed issued another emergency cut, with Wednesday being the date that they were supposed to meet up with in general. So now, I mean, I'm going to get straight to the punchline in with it. I mean, if you're here, you listen to it, you're going to hear me talk about this tomorrow. This is wild in general, but I mean, there's going to be some level of news here that's going to go crazy. I mean, simple as that. You're going to have some level of something's going to happen this next week, because the fact that they did another emergency cut, the Fed knows something. I mean, I'm sticking to that right now, and that's it's really, really weird. I mean, that is something to just be straight up like, huh? Like, I mean, imagine how many times we've listened to Jerome Powell. Imagine our order that we've had with all of this stuff. The fact that this is coming out over the weekend. They're doing this before Monday morning. Do you guys understand? Remember I said last time, I said they're sitting in rooms, they're doing these meetings and everything. I hope you realize, like, right now, the fact that they came out on a Sunday night with this news, and that it was a point. This is the biggest. Not only is this an emergency cut, this is the biggest one ever. Emergency cut of 1.25 points. Do you realize how crazy that is? They cut everything. They took the reserve ratios down to 0. They're saying the banks don't even need to hold reserves. They're saying throw the money. I think a mandatory quarantine is coming soon. I mean, I don't want to say 100%, but it's looking like that. But this is wild, bro. I'm telling you, man. This is wild. This is absolutely wild. So, unlimited minutions, bro. I mean, I'm telling you, I mean, I made that video on the weekend, and I said, these are actions in the weirdest way possible. You haven't seen this shit since 1929, man. Like, this is like dude, they're using some of the same terminology, unlimited liquidity. They're cutting more here now than anything. The 2 emergency cuts before the meeting. Like, do you guys even realize, like, how baffled I am right now, too? Because this is through our timeline. This really, really jacked up the timeline. I mean, if you guys really, really picture that before the meeting, I mean, I'm shocked. So that's why I'm saying I think there's going to be some level of data. We're probably going to find out who failed this week. We're gonna see a lot. I mean, it's going to get pretty crazy. So I hope you guys are ready. I mean, this could be even a regime shift in terms of now where the market's pricing this stuff in. So the market could be very, very wrong in how they're pricing it in now, and that means a lot of big moves here. This week is going to get historical even more. So, I mean, I hope you guys are ready. Now, one thing Powell just even talked about, these are with the questions. He's saying it's not QE, but for the most part, it's pretty much QE. And I'm shocked that they did that. Again, remember I said that in a video last week, and I said there's no way. I said they wouldn't. I said the only way they go to QE, and that if they did that, that would signal something very, very, very bad. But what they're doing now, and what this is going to relate to, has to do with bonds. So remember, that's what they're doing. They're going to start buying up the bonds. So TLT should go up. He said, if you listen to what Powell just said, he said that they need to they want to restore things back to normal. And why do you think they're throwing $500 billion at the bonds? They said the treasuries market. So they're going to buy all across the curve. They're going to try to increase that demand. Their job is to, when he says make things go back to normal, that's TLT. So remember, we've been talking about how TLT started to break. They know that, and they need to fix it, because if Powell, pretty much, I'm pretty much looking at it, it's going to be hard because the premiums. Good thing we already got some, but I think the Jerome Powell has to keep TLT up. If TLT goes down, aka bonds, so if pretty much bonds reverse the trend, the Fed loses, and the Fed loses a lot of everybody loses a lot of money if that happens. So that's why I think that they're doing it. No, they could downplay it all they want, but this is what I'm saying, just confirmed it. You think about it. You do one emergency rate cut, you cut rates. It's a demand issue. I don't necessarily know if it's caused by demand, but there's a lack of dollars here, and if you cut rates the first time, that should increase demand. That should make money easier to go out. But the problem is now, they've cut it once. Now they couldn't even wait 2 more weeks. They did another cut, and instead of cutting half a point, they cut a whole point in a quarter, the biggest ever. And then they cut this much. They need inflation. This is deflation. That means, so he even answered the question. He said it's not deflation. He just said inflation's not going up. But I think it gets to the point where even if there's no deflation, the fact is, if you get zero inflation for too long, you're essentially deflating. It's going to get a little bit tricky here. There's a lot of macroeconomic things at play here, but at the end of the day, if you want to keep it simple, the Fed taking this action, they're the first to respond. You don't get it twisted. The market was doing bad, but they did an emergency cut before we saw some of the biggest down days. So the fact that they did this again, this isn't good. They did oil's down. Oil clipped below 30. There's a lot of stuff happening here. So I think the liquidity issue is big, and I think it's affecting the bonds, and that's what they're going to do. So this is going to be crazy. I really hope you guys, bro, this is, like I said, man, you could look back in history, but you guys are living through times right now where you're seeing craziest, you're seeing real ass policy changes that they haven't done in a long, long time. They're even talking about Section 13.3 powers. They're talking about stuff listed in the Fed where the Fed could just start giving money to people and crazy shit. Shit you wouldn't really think about. But this is there's no history from. Again, the only history you have is crazy actions over. This is where. This is what I'm saying. You guys, you need to work together with everybody, man. You need unity. Virus don't care what color you are. It don't care where you from. It don't care if you smart, rich, or poor, baby. Anybody could get this smoke. And this is a very, very unique time in history where you're seeing that if everybody could get affected by it, and it's hitting everybody all at this one time. This is a very, very unique thing to watch, because now you have it where it could go out in all of these different, you're not seeing actions taking in so long, because we've never gotten to this point. That's it. This is wild. News win the temporary close in Vegas, New York. So some people are forecasting some crazy news here over the weekend in general, but this is this is just wild. Again, like I'm saying, the actions they haven't put into they haven't put into actions like this. Again, just for the Fed to be reacting like this, to take the banking reserves to zero. They just said, hey, that's what they did. They cut the reserve requirement. That's this is some China shit. We're not as far in there, but this is the kitchen sink. The fact that they're they want the banks to do this, do all this. It's wild. I'm not nervous. I'm just we're living through this. I'm more shocked that this is actually happening. It's something. This is. Again, it doesn't. I think everybody is. I mean, at this point, I mean, even all the people, whether some people wanted this to happen, some people didn't, all the people who are extremely bearish, even the people this is just going to be a humbling moment all across the board. But it's something that, I mean, I'm not nervous about this at all. I just didn't, I really underestimated the time. I mean, I didn't, the ironic, funny part about this is that I didn't think I would live to see something of this nature where we, to live through something like this. But the fact is why, because we're living in modern times. And this is why I'm saying this is so trippy, because we're living in the modern times. This is the modern event, but look at the tools they're using. They're taking the same actions they did 100 years ago. So I didn't think we would ever, I thought our society would change or nothing would have pushed us to this point. But that you're seeing, but that's how this is some real shit, because it's coming all the way. You're doing the same actions. I mean, they're using the same phrases. Literally almost 100 years ago during 1933. I mean, the same promise of unlimited liquidity. It's the same. It's word for word. The same, commandeering hotels, motels, the fact that shit they would do back 50, 60, 70 years ago, So even cutting the reserve requirements, all of this. So that's why it's fascinating. And that's where I'm saying here too now, it's a mix of modern and past. So nobody knows what's happening here. I mean, and that's it. And the fact is now every single point moving forward from here, I mean, maybe I either got smarter or I either got dumber, and the same thing for everybody else, just because now if there's no charted territory of this, any economic theory moving forward is simply a theory. So there's no real data. Does that make sense when I say that? That's why. So maybe, I mean, somebody randomly could connect the dots with economics now better than, because you've never seen this. So any action they do now in the future, even right now, this is what they're going to say in history. This is, go back, look at it from the perspective of a history book. They're going to say, this is what they did. And then they tried with the repos. They try everything now is just a theory. Everything now is an experiment. Is the best. That's why I'm saying I either got smarter or dumber. Same thing for you. Nobody really, there's no way to have any idea. However, I mean, the only other back context we have, this is like World War II type shit. So it's a weird economy. It's a weird thing going on here, but I'm not nervous. I'm more, again, I'm fascinated. Because I'm excited to see what gaps and inefficiencies this creates, where solutions are created. But the fact is now too, I can't deny this. You guys, this is today, like even what happened with the Fed. A lot of investors could interpret this as negative or panic, but in the midterm into the long term, this is very, very accommodative. And so you want to buy where the Fed is buying. I mean, it's simple as, don't get it twisted here. So even though the Fed is doing this and it may sound scary, there's going to be a shift where you want to go where the big money is. So they're going to take the Fed is going to take a little bit of loss, but don't forget here in the future, you could ride the coattails of the biggest bank in the world once it starts getting up there. So I'm following both sides. So both sides are going to be interesting. I mean, all of this is going to get crazy. So I hope you're ready, man. So if you guys don't know, second link in the description, Nightly Watchlist main channel. Make sure you drop your thumbs up on the video. Second link for the Nightly Watchlist. But the Fed did another emergency cut, and they did this here on Sunday coming into the weekend. They did it specifically for tomorrow. Do you guys understand that? Because by making this action, because usually if they did it tomorrow, it would come into play on Tuesday. So they did it today because something's going to go crazy tomorrow. So they need that. They need the rates at zero tomorrow. I mean, they cut the rates down to zero, you guys. I mean, this is one of the biggest things ever. Yeah, some people are talking nationwide. Yeah, it's probably going to get to that point. I mean, at this point, I mean, who knows? I mean, shit, you don't even know. Like, whatever happens here, I mean, it's going to just start getting a little bit wild here. But this already is. I mean, that's what sucks, because there's going to be a delay between the Fed and everything else. But it's the Fed just confirmed it. I mean, I've been speaking this for years. I mean, again, so it's like I've been telling you guys this for a really, really long time. So I mean, I hope you guys, this is why it's very surreal right now. the fact that they did these cuts right here, I think they're signaling something. They know. I mean, I don't want to. I mean, you could call it tinfoil. I just call it economics. I mean, the Fed's on top is they know something, bro, and they just confirmed it. That's it. I mean, I've already that this has been my theory. So it's either I double down on it, or because this is it. At this point, do you guys get ready? You guys realize I was waiting till April to see us come down to zero? That's what I've been saying this whole time. I said, so I thought it was going to come back up, and then by the time we hit the April meeting, I was expecting that, but not 2 emergency cuts. And then the bond buying program, like that's we're already at zero. This is, unprecedented. Honestly, this is just crazy. They couldn't wait another 2 days. It's not only, dude, it's another 2 days and the size. So not only is it the timing, it's also the size. They cut all the way down to zero. Yeah, this is the fastest drop back to zero in history. Any rate cut cycle takes time. So let me see if I can find it for you. Federal Reserve. Like this is dude, I'm shocked. Where's my Wikipedia? Where's that Fed funds rate? Historical rates. Where is it? I think there's another Wikipedia here. I'm a Wikipedia gangster. Let's see, where is it? Yeah, there it is. So like take a look. I mean, and this is what somebody said today, and I think it makes a lot of sense. I mean, really what you guys are about to see is this isn't going to be as bad as 2008. But it's going to be worse than 2001. It's that, or it's going to be worse than 2008. It's either. Do you guys understand that? So it's either. I mean, it's hard to say the longer term. This is either going to be a longer term, and it'll be worse than 2008, or it'll probably be the only uncharted territory we haven't seen is something in between 2001 and 2008. I mean, it could be again. I mean, I have confidence in it. I mean, maybe you guys could call me delusional. You could call me, what it is. But I mean, at the same time, I have confidence in the ability. I'm gonna go where the trillions of dollars go in the longer term, and in the system. I mean, I'm already impressed with what they're doing. Just in general, I mean, how they're already coming up to solutions with this problem. So, I mean, don't forget, at the end of the day, this is exactly. So you guys haven't seen it yet. But this is what it's starting to look like. I mean, look at everybody. Look at the reactions. Look how you feel about the market in general. Right now, it's getting that point where this is real fear. Everyone's like, oh, buy when there's blood. Buy when everyone's like, you haven't experienced. This is what this shit looks like. Because now it's like, even if you want to buy when people are fearful, you should still be scared too. And that's what it's getting to. So I have faith in it, though. I have faith in the longer term. So I don't think. I mean. I'm very, very confident in it. I'm actually, even with I'm already surprised. That's what I'm saying. Don't underestimate. Everyone's going to overestimate how bad it could be once once people get past that stage, it's nothing. Now everyone's like, holy shit, this is crazy. It's going to reach a point where you would be surprised how fast it could change. Nonetheless, and pretty much what I'm saying, the weather's going to clear up, but we're about to run into a straight hurricane right now. That's the best way, but I would be very surprised if we run into the Bermuda Triangle and that hurricane lasts forever and it doesn't go away. So I think as long as you could bear down and make it through this, then you'll be able to go. I'm gonna seek the opportunity. I mean, this is really what you really want too, because again, this is that level of buy when others are fearful type shit like that. Is when everybody gets fearful. Like you'll see it. I mean, I think we could already see it. So get ready. I mean, I think it's excited. Am I going to help you through this? Of course. I mean, as long as you stay alive, listen, control the balance. All you got to do is stay alive. That's the key in this type of market. There's going to be two people. There's going to be people who try to stay alive so much that they hide in a hole, and then even when everything's cleared up, they're still living in their bunker. And then there's going to be the other type of person who wants to make a big opportunity out of this. Instead of staying alive, they're looking to attack, and they take unnecessary risk and they get clapped in the process. So the key is just staying alive. That's it. As long as, I'm going to be chilling in the bushes, as long as you focus on protection and not going for profit, you will be able to profit again, everything is going to be balanced from this. So yeah, be a camper, baby. Shout out to boot camp. That's what I'm talking about. But so just stay alive. I mean, it's going to get crazy though. I mean, already the emotions are coming to play. This is, and again, historically, this is just unprecedented, man. I'm telling you guys, like another emergency rate cut. This is wild. This is wild. So this is what we're saying, though. This is the fastest return to zero. I mean, so where was it? Like, here's December 2002. I'm surprised it doesn't go past that, but they were at 1.25. It took them almost a year and a half, or no, 6 months from the first one to kind of come back up here. They cut to 1, but then they kept it there. Then they started to raise rates, and then when did they start cutting again? So here's 2006. I mean, this is the only other history, but where is it? See, they look at this is just like what happened with us, from 2004 2004 till 2006, they started raising rates. So the rates went from 2% to 6%. They raised it a lot faster than we raised rates. So again, we raised rates in 2019. Or was it 2018? I think. No. Where was it? Yeah, 2018. 2019, we started raising rates, but not as much. But now notice how fast they cut. They went from August, for them to go from 5% down back to 0, it took them about a year. It took literally a year. We just went 2.5% to 0 in what? 1.5 right here, October 2019. Then surprise from March. So, dude, that's... Bro, this is crazy. Look at this. When do you ever see anything this close? March 3rd and then 11 days later, dude, nothing on that scale. You would never, you've never seen 2 cuts in the same month except for December. Actually, yeah, I guess December 16th and 14th. No, I think they only changed the lending rate. Yeah, and they did that here. Oh my God, yeah, the discount rate. No, dude, this is crazy. Yeah, 2 times in a month like that, wild. Well, welcome. So, hope Robinhood doesn't go down tomorrow. I mean, hopefully we'll see. We'll see what happens. So, good time to get a car loan. I wouldn't really get anything right now. I mean, they're going to it'll definitely be accommodative, but deflation, I mean, let's see what happens with the prices. I'm just patient with everything. That's what I said for my plan going into anything. It's just showing patience. So if you want a house, you want a car, I mean, just don't be impulsive. Give it some time, and just be patient with everything. That's all. I'm going to be chilling with any sort of patience right now will not hurt. This is crazy, bro. They halted the futures. It's already down 1,000 points. This is early, too. So everybody watch the watch list if you guys haven't seen it. Second link, nightly watch list, main channel. I go over the plays. I even went over the big GLD play and everything else. You guys want to hang out here for a little bit? I think you guys will. Let's answer some questions. Let's talk about stuff. But let me go to the bathroom real quick. So I'll be right back. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video if you're on mobile. Press high chat, X out the chat, hit the thumbs up button. Second link for the nightly watch list and main channel, baby. Get on that. First link for the Scream Alerts Bootcamp and Real Estate course. Let me go pee. This is crazy. Whew. Patience, patience, patience. How do you guys feel? Your sisters and escorts, would you go through? I mean, it's that's what any time of these situations, like you want to be smart, but I don't like being reactive, so I don't like to change too much. So it's like she's already in the escrow, this and that. I mean, it's going to be some time, it all depends on what she wants to do. Again, it's hard to give financial advice like that, but, just be careful with that. I mean, what's the urgency to move? What happens? You have to just ask yourself cost-benefit analysis. Like, what do you get by waiting? What do you get by not waiting? And that's what you need to ask yourself. So this is wild. I mean, this is very, very, very wild, you guys. I mean, but this is important. It's even getting to the point. I mean, just get ready. It's going to go up and down a lot, very, very big. And just the fact that you see people, the fact that people get very, very fearful, I'm telling you, that even in itself causes another shift. Sure, it could mean a lot more downside, but I'm telling you, once people start really tripping out, I think now it's going to get to the point where once people really start underestimating the upside, it's creating a good opportunity. I'm not now, granted, a lot of people are going to say that, but once you're already down 30%, if you do start getting another level of fear, the upside becomes very, very attractive. So, this not again, and you just have to play both ways on. I hope you guys realize, like I'm looking at this from both ways. I want all the opportunity, but this is going to, the Fed said something today. The news they came out is very, very important, but we need to see how market reacts to this, and we need to see other moves in prices. So I know a lot of people have opinions now, but we need to see how currencies move. We need to see how bonds move. We really need to watch how bonds move tomorrow. We need to watch how gold moves tomorrow. You need to watch the real pricing of stuff, and then not to mention now the premiums for any of these trades. So that's the key. I really hope you guys are gonna be looking at this very, very objective, and this is your time to be very, very smart and observe, and don't get caught up in the panic, but just really be very, very rational and objective about what's happening right here. And that's, we have to find the opportunity, because this is great. Patience is going to be key, man. It is going to be a busy week. So what do you got? You guys got any questions? Where y'all at with this, man? What y'all want to talk about? The CDC says they recommend canceling any events larger than 50 people for 8 weeks. Did everybody watch the Watchlist too? Second link, TLT. So you want to know about TLT? All right, what's your questions about TLT? Is most likely going to go up tomorrow if the Fed if the Fed's job is confirmed tomorrow. Yes, so pretty much what they just mentioned that will affect your TLT play is they said they're going to be buying bonds. So if the Fed commits to buying bonds, that should raise the demand of bonds, and that should now make the TLT go up. So, but the problem is now, here's what you have to realize. So what the Fed said they're going to do should make TLT go up because they're going to be buying bonds. However, now the problem is if the action the Fed took to supply TLT, they're only doing that because that means there's a big factor that should theoretically make TLT go down. Are you guys following with me? So now there's something happening, and they're expecting something coming into tomorrow morning that should make TLT go down. So they need to step in, and they have to make TLT go up. They need to return the bond market back to normal. This is the problem right now. Because now, with TLT not moving how it's supposed to, they are saying, there's something wrong with liquidity. There's something wrong with the balance of TLT. So they say we have to buy all of these bonds right now, and we need to make that happen by cutting the rates to zero. We need to make sure banks have zero reserve requirements so the banks could step in and help us. And we need to return the bond market back to normal. We need to buy the shit out of that whole curve on the bonds. They're going to buy the 3-month all the way down to the 30-year, and they need to buy all of it. But the problem is somebody is probably going to be selling off huge tomorrow, and now that's where you're going to get the balance. So I don't know how it's going to play out, but you technically have the Fed on the side of your of TLT. The Fed should supply TLT, but so what you might see tomorrow is TLT might go up, but not as much as it should, but then the premiums are probably going to widen very, very large on TLT. But now it makes it harder to double dip on TLT now. TLT just everything got a lot harder, bro. This just messed up the whole timeline. That's why I'm like, shit. But this changed the whole timeline. So we have to find a way now to see really what we're looking forward to. But the fact that they cut to zero, that's a big, big negative indicator. Very, very big. TLT's at 181 right now. No, it's not. And again, you can look at /ZN. /ZN is the bond futures. Oh, wow. See? So TLT could even get limit. Yeah, the TLT is going to be up a lot now. But this is the Fed now. So we'll see. I mean, we're going to see. I mean, TLT should be good, though. If not, that's the best part, though. Because if TLT breaks, so this is why we got the gold play. This is why. So watch the watch list, second link in the description. I mean, that's why I don't know. I said it. I think I pulled the Fed's card on Friday. That's why I said. I mean, this is showing. I mean, they have to fix TLT, but gold is the hedge to TLT now, because now GLD and gold has been going down with the market. But the whole point is, if this fails, so if the Fed can't get control of the bond market, and then the TLT starts going up the other way, what's going to happen is then that means bonds are failing. Then people are really going to rush into gold, because once one safe haven sells off, you're going to get more sell off in gold. But after some point, people are going to jump back right into there. Where can you find the watch list? Second link in the description, baby. Here you go. Here's some watch list spam for you. There you go. There you go. Run it up, baby. Make sure you're on the watch list. So even when we get off live, you guys should be on that. I got SPY puts. What should you do? It depends on the pricing. It depends on the spread. It's going to be very, very difficult to see. But I've been doing this since I was little. Yeah, business. Bro, this has been crazy, man. I mean, I'm telling you, man. I hope you guys realize it's been crazy. We've been on top of it. I mean, we've been on top of it pretty good. So it did get, I mean, this is like being on a mechanical bull. It just got a little bit more difficult here. So I have to be a little bit more focused, and we have to spot opportunities. So you guys might see something other people might miss. I mean, call it out, but this is definitely going to be a time here where we have to be smart. You got to control the balances. It's going to predictions for, I don't know. I mean, I think it could even go up, but it could go down a lot. The futures, they just threw the kitchen sink. I don't know how. I've never witnessed the kitchen. No, nobody has, and nobody's seen the kitchen sink thrown this hard by the Federal Reserve ever. Last time they did, the Federal Reserve was a lot newer, and it was just a lot different circumstance. So, but they just threw the whole kitchen sink. So we have to see how this reacts, but nobody knows. I mean, that's going to be the craziest part. What do you say for the people holding? I mean, I'm holding through everything. I'm just waiting to buy more. I'm going to wait. I'm going to be a little bit more patient to buy more, but nothing changes with the long-term portfolio. I mean, that's why it's long-term. I mean, if anything, you just got a really serious opportunity to upgrade your portfolio, but you could be patient here. But I'd keep everything long-term. I mean, that plan doesn't change regardless. I mean, I'll say that no matter what. How do we go about the potential shorting ban? I mean, I think they should at this point. I wouldn't be surprised. They'll just do the uptick rule. So, I mean, that's what you need. It'll just slow things down, but it'll make it a lot harder for you guys to trade. But it doesn't. I mean, there's more That's where I'm saying where everybody, you got to realize this is where the shift is going to happen. Everybody thinks you could only make money in this by buying puts. That's where you're going to take a lot of L's, especially in the longer or mid-term. There's going to be more opportunity. It's not just buying puts. It's not just shorting. This is an economic shift. I mean, I hope you guys see from an economics perspective. I mean, there's a lot of opportunity this is creating through everything. I mean, every single thing you're going to see so many different stuff, So, good luck and be smart. I mean, that's it. This stuff's moving fast. So we'll see. I mean, don't go too soon. I mean, don't be too timid. That's why small amounts, controlling the budgets could go a long, long way. It's going to be exciting, man. Very exciting. Where's my water? I need more water. Stay agile. Stay nimble. No, it's not dangerous to sell put credit spreads. Just sell them outside the money. Just be care of any assignment risk, you know, if it has a dividend. But it's a spread, right? If as long as you do a spread, it's the same. If anything, it's more in your favor. You know what your max loss is going to be. So it's just it'll just be harder to determine what the stock is going to do. But the underlying risk doesn't change. It's the same thing back and forth. Same risk. So you know exactly what you'll lose. You ready for Cole Avenue? God willing, baby. Let's see. On time frame to when stocks will be back on the bull market. I don't know. That doesn't matter. I mean, it could be in a week, it could be in a year, it could be in 4 years, it could be in 4 weeks. Who knows? But the point is that's as long as you're watching. That's why we have to be watching now. This is going to create opportunity. Just don't get caught with a older mindset as this stuff starts moving. That's it. Or don't get caught thinking one thing's going to happen. It's going to keep getting worse. It has to get better. You just can't get caught with any mindset. That's what's going to happen here is that I don't care if I'm right or wrong. I have to take what's in front of me, the evidence, the data, and then move from there. Same thing even with the option prices. That's what I've been doing. That's where, think about, bro, we hit even all those options we hit on Friday and Thursday. We hit a lot with the shorter terms. That's because the options were telling me something, So we just have to react to what it's giving us. But yeah, that's what I mean. Be nimble. Don't even be ready. Think a lot. Be ready to be wrong. But just don't get caught being really wrong. That's it. Just don't get caught. Don't get caught with a lot of money. Don't make big bets on some stuff where if you're wrong and it flips you, then you're clapped. There's so many opportunity and anything can now, just come up out of nowhere. So get ready, baby. Everything should go down tomorrow, but we don't know about the premiums because, again, we gapped up. We had a big run up on Friday. So even the futures, I mean, they're down now, but they're really not that down. I mean, when you look at them, like compare this to futures are just limit down back to when we had that end of the day halt. I mean, we're right back here. We're right below the Fed thing. Where is it? I don't know where the Fed high was, something like that. But yeah, it just still looks ugly. I mean, something's gonna happen. I mean, I'll say it right now. Something's gonna happen this week. I mean, I hope you guys are ready. Something by this week, even towards the end of the week. The fact that the Fed has already signaled that this is the Fed signaling it. The Fed knows something's gonna happen. I mean, it sounds conspiracy. It sounds crazy, but I mean, I'm pretty good. Yeah, and that's what happened last week. I mean, I said that last week, and then it happened. I mean, I thought this was very likely that they'd go to the QE aspect of it, but they did it, and that's what I mean. I'm like, dude, this is nuts. I mean, I almost sound like a broken record at this point, but that's the point you have to be able to look at. But now, I mean, it's not just buying. If the house is on fire, the insurance is expensive, so that's why you can't just buy puts. You just can't buy puts. I mean, not saying in general, it has to be one with a good price. Like any of the stuff we picked up, like we got some steals, like even those GLDs, we stole those GLDs. If you really put that into perspective, imagine all this stuff that just happened here. And then those GLDs, we stole them. We had those the March TLTs were decent, but we still have the TLTs. We stole those, but like the gold, that was a steal. Some of those strangles, that Amazon one, decent, but if anything, that GLD one we stole that. We stole that thing. That was almost as good as the TL. We'll see where it ends up though, because it hasn't done the same thing, and now my same situation, why I don't even play paper gold to begin with, it could still be bad, but in the context of like implied volatility, we stole it just because the premium was not. We bought that premium 50-70% off from 2 days ago. So this is wild. I mean, this is going to be wild here. So USO, I mean, we'll see. I mean, we have to see where it is, but there's the futures. They're halted limit down. Oil, it clipped 29.75. I mean, didn't we hit like 26 or something? So we'll see. But man, oh man, I don't think TLT's at that price. I mean, the futures are high. TLT should open up and start being a little crazy. 2828. Oh man. They're flipping in high volatility. I'm probably gonna hold it, just because I have a decent amount of time. But depending on how much percentage we get, like if I could get like 300%, I'd want to make it free. But I do want to hold it a little bit. I mean, That's why I say we have to see tomorrow. I mean, if the premiums are extraordinarily high, I'm gonna take it because that's what happened. If you sold it last time on that last Friday, you sold on Friday. Even if the market drops on Monday, you would have got more premium. It was really, really weird. So if I'm gonna be more inclined, I just need to see the prices. I really need to see the prices tomorrow, and that's gonna be the main thing. I'm looking. I mean, I talked about in the watch list. I went over all the plays to watch. So check that out. So you guys know there's industries now, and then we have to use our last plays that we have to just get an idea of what's cheap or not. But here's the thing, you know, right now things are going to change very, very this could change the pricing in. I mean, simple as that. What the Fed just did, you might see the market could have been very, very wrong with what to price in, and that's the scary part. But we don't know. So we have to see, but just what the Fed did, it's crazy. It is crazy. You know nothing about the stock market. We'll get you. It'll make sense. It'll make sense at one point. I mean, and that's the problem right now is that everything is so complex. You have so many complex systems colliding with each other all at one point right now. So there's so many different factors. That's why I'm even saying, like, even if you simplify it, just what the Fed just did today. I mean, the fact like they did it on a weekend, and then they had a meeting planned for 2 days, and they did an emergency cut like that. And the fact that last time was 20 years ago, or 2008. But nothing like this back to back. I mean, it's wild. That's what you have to understand. That's the Federal Reserve preparing. They're cutting rates because they see something with demand and everything else. They're responding to it. So I mean, I think that's gonna change a lot of things, man. So I hope y'all ready, but give it some time. If it doesn't make sense, no worries. Just be smart. The fact that we're live right now is unprecedented. Exactly. That's why I was shocked. Bro, I did the watch list. I was like, what? I was doing the watch list. I was getting ready. I was like, oh man, I put the watch list out. So second link in the description if you haven't seen the watch list. I go over I gave three different stocks there to look at, but I was like, it was a phone call. Jerome didn't even go out into a normal press conference or anything. He was on the phone, bro. It was wild, absolutely wild. I mean, it's crazy. It is crazy. I wait to see a lot. Bro, I'm shocked. I mean, this is the most, I'm telling you, this is the most important piece of news in the decade, like the last 20 years. I mean, that's why I'm like, this is so surreal. I can't believe they did it. Like, this is probably the most important thing you guys will, in general. This is the most important piece of news. It's crazy. It's crazy. So, I mean, I hope you guys are realizing, like, the recent events change. No. I made the watch list after this news, so I know what I'm going to be looking for. I have my general ideas. Like, you know, again, we got lucky again. I mean, think we got God is good, baby. Shout out to coin. Shout out to God. I mean, we've been blessed with some wisdom and some foresight here because now, I mean, we stole before everything else. We got those golds. That's going to be good. Everything else now. I mean, it's just a matter of I need to see the prices tomorrow, and then we're going to respond to that. But depending on the prices, depending on the market moves, depending on the next, the next 2 weeks, I mean, this is going to, if it changes, I said on the watch list, a regime shift, meaning it's the pricing. So if right now there's a whole, you know, structure of what people are pricing in, but now the markets didn't price in enough, it's going to it's just a whole new statistical model. So it's going to be a whole new level of pricing. So that's where I'm saying if we could observe that, we could set up for the second wave, but I'm cautious about the second wave because I don't like to set the second wave up with prices still high. That's the problem is like it's like another big wave coming, but the first wave hasn't gone away yet. So now the prices are going to be a little bit difficult here, but I mean, we're going to see. We're gonna see. Yeah, they don't feel me though, man. They don't feel. I'm trying to break. That's why I hope you guys are ready. Are you guys all gonna be here in the morning? Are you all? Everybody watch the watch list because I go over the types of plays too. I mean, go over the types of plays. Be ready. I hope you guys are ready, man. God is with you. God is good. I'm excited. I mean, but this is another, bro. I can't get crazy. They did emergency rate cut again, bro. Emergency rate cut again. Ain't that nuts? That's nuts, man. That's crazy. It's nuts, man. I don't even know. Did TLT just open up? Oh, God. Tilty, where are you, Tilty? Give me Tilty. The lending tips. 164. That's huge. Yeah, it's halted. They limit. There's gonna be a limit up halt probably. They could limit halt it. Like it's the same thing. It's a bond. It's the same thing. Even limit down. That's crazy. I tell you, Tia. So let's see. It says Fed. We literally have the Fed on our side of TLT. Do you guys realize that? Y'all don't feel me. Y'all don't feel me, man. Y'all thought everyone thought I was crazy. Y'all still think I'm crazy. I like being this. Let me be crazy, man. But come on, man. I said it on. Oh, we pulled the car, baby. I said nothing like the Central Bank of America on your back right there, baby. Oh man. Oh man. Man, oh man. This is only gonna get wild, baby. This is only gonna get more wild. That's what I'm saying. Just don't overestimate how fast or slow. This is just gonna be timing and responding. And like I said, there's no precedent. So throw everything out the window. I mean, this isn't gonna be a time to have an ego. So we'll see. I might be. I could have been hitting all these moves. I might miss the next 20 if I get too caught up. That's why even whether it's gold or anything, I need to be quick to move around. I don't even care about anything. We have to be quick to flip. Gold. Let's see if we hit the gold at the right time. If my gold hedge theory works too. Remember, buy me a house, be positive, save your money. Just be smart. At the end of this, I'm gonna just give it. It might be a couple years, so just make some moves on this. Oh man. Yeah, the GLDs are probably. Well, we'll see. I mean, let's just see, man. We just gotta see, man. We just gotta see. Bank suspend. This is gonna be wild. Yeah, JNUG would work as well too. It's gonna be a little bit more volatile, but GLD is. We got Maze on those. Let's just see what happens, man. I don't even know. It's gonna be easy to get excited, so we'll see what happens in the morning. But let's see. The GLD should skyrocket. These should be. Let's see. We'll see what happens. We'll see. Yeah, we're live right. The Fed cut rates. So we were listening earlier about an hour ago. We listened to Jerome Powell gave a phone press conference discussing all of this. The Fed cut rates again on an emergency weekend meeting before the planned Wednesday meet. They cut to zero. This is insanity. They cut to zero. This is bigger than any emergency cut. This is the fastest we've went any rate cutting cycle. This is the fastest we've ever cut to zero. So this is wild. That's why. You guys are about to see a lot of different things. It's going to be, like I said, just watch out for what's going to happen here in the future with stuff. There's going to be different opportunities, different plays. This is going to be a crazy week, bro. I got a lot of rest this week. Though. That's why I was ready to go here for this live, but man, sleep up, man, get rest. You guys stop going outside, okay? Your hip hop yoga class is not that important. Stay inside so you don't put the other weaker people. That's it. Everyone's now embracing social distancing. So now we can say it. Just be smart, man. Just stay inside. Watch the stream. I'll be with you guys. This is crazy, bro. This is crazy, man. Yeah, some people, everything could wait. Some people, your trip to Italy, if it's deflation, You could get a trip to Italy a little bit later. You could do whatever you need. Section 13.3, those are extreme measures by the Fed. So again, they even talked about that. The Fed, this is what I'm saying, bro. This is the last time we've seen the Fed do anything of this nature and even use the wordage they used. The last time they did this was the Great Depression. I mean, that's it. I mean, it's crazy. It's absolutely wild. So I mean, I'm surprised. Yeah, we'll see. I mean, should we see the other countries? I don't know, man. This is Introvert's been training for this. Yep. 100 years on the dot. Where is it? What's open right now? The Nikkei's down 0.25%. ASX. Oh wow, that's Australia. Yeah, Australia's getting clapped right now. So the Dow futures are already halted. So we're looking at GLD and TLT, but Dow futures are clapped. They're already halted, limit down. You're not going to see those move. Bond futures are still. This is, dude, TLT, bro. If we hit TLT and GLD tomorrow, that'll be nuts. But we really have to. We have to really just focus on how we're going to maneuver this. I mean, that's so. You guys realize that's even the next step. Once you're already in we're in such good plays with such good time. You know, even if the premiums aren't favorable, we've still been able to hold them and ride them out through. So we need to find out. We need to start figuring out a timeline. We need to try to, again, we got to be nimble with it, but we need to start planning for the future plays. I mean, this is really a time, you guys. There's so many eyeballs here. Let's really try to find some plays, source that information. I mean, you guys we could find a lot of stuff. The key is just going to be option pricing, honestly. The SPY, yeah, they've already done. It's already halted. You won't see futures. Futures will not trade below this price till market open. They've halted it. It's everything. Even at least commodities can move and stuff like that, but it can't go below 217 or 21,700 on the Dow until open. And then it's going to be just like last week. We're going to halt down and then go from there. We might hit the 13% tomorrow. I really don't know at this point. Yeah, the GLD, I think we paid 50 cents for it. But so oil's coming up. We'll see here, but that's the bond future / CN. Gold is still holding up, but GLD and TLT made moves. You have to be careful of buying it open, maybe in the first 30 minutes, because again, I could be wrong on gold, because if gold shoots up now, but then it keeps coming down, then there will be another opportunity to get it. But I even think after tomorrow, even if gold goes down, I think the premiums are going to go crazy regardless. Yeah, 10 years going to, bro. We're going to see, man. Dude, this is going to be crazy. Absolutely crazy. I think it's just TLT. We got to we got to see how we're going to play TLT. I mean tomorrow, I've hopefully again, don't forget that too. There's the opportunity between playing short-term contracts and long-term contracts. So I think I'm going to be going into the longer or the shorter term ones to see what we could flip, and then writing out the rest of our longer term ones. As we dump premiums, I mean, be careful. I mean, this is what lack of liquidity is, and this is why premiums are so high, is because it's harder to get out of something and then go back into it. So you can, but it's going to cost you money. Man, oh man. Just get ready. Time is your friend. I hope you guys are ready, man. This guy. I hope you guys watching the watch list. I hope you're gonna be on stream tomorrow. If not, I mean, get your scream alerts. Just get ready. Just be in the game. I just way better off just being here and in the game. Yeah, none of this option advice, option traders, you can lose all my friends. Please don't find education purpose only. Thank you. Have a wonderful day. So let's go, baby. I just hope you're ready. I hope you're ready. I'm ready, Coach. Are you sure? Oh, that booking debit. We have a lot of stuff. Dude, those Adobes, man, we're going to have a lot of different stuff. Jesus is coming. I don't know about that. You remember Jesus said, he said he'll come like a thief in the night. This too obvious now. Maybe he's just trying to get your attention. Maybe, is it funny how something like this now, you get everybody unity together now? This will make everybody work together. Don't matter if you Democrat, Republican. Have you noticed? You're gonna start seeing it. You're already seeing a lot less hate now on the internet. Because now as people they're like, oh shit, this is real. You don't have time to be petty anymore. Yeah, that's it. You don't have time to. That's it. Now it's just like, well, shit. Can you help? Can you help me out with this? How can we do this? We should start looking about other people in our communities. Oh man, ain't that crazy? So that's good though. I mean, I think it's good. It's not a bad thing. But I mean, I don't think it's. If Jesus does come, we'll see. But I don't, now it's too obvious. This is too obvious. The world's going crazy, bro. The world's going crazy right now. We are one, baby. That's it. Wild, baby. Well, good evening, though. How y'all feeling? What time is it? It's 8 o'clock Eastern, 5:11 here. Hopefully, I put out the watch list early, man. You guys got the watch list early, man. So I hope you guys are ready. Yeah, TLT should. I mean, it's working right now, but once the market forces come in, that's why tomorrow's gonna be crazy. I mean, we just don't even know how investors are gonna take it. The Fed is gonna come armed tomorrow. The Fed is gonna buy the shit out of. Oh, we'll see. Let's see. I mean, that's dude. I don't know. I don't even know. So I don't even know what's going to happen to GLD. I don't know what's going to happen to anything. We will have to see. I hope you're ready. I think we're going to still get some announcements here over the weekend, too. I think we're still going to get a few people who are supposed to talk. Correct me if I'm wrong. East Coast appreciate. I'm good. Hopefully you watch it. Watch list is second link in the description. Here it is. I'll spam it for you. Yeah, they're gonna buy 50. That's where TLT should come in and play. I mean, just get ready. This is gonna be wild, you guys. I see GLD shot up there. Let's see we got to see gold. I don't know if it's gonna work just yet. But TLT looking pretty nice. We'll see, man. We will see. I hope you're ready. We updated watch list. No. I made it after the Fed thing came out, so I was able to address this. But let's see what happens. All right, man. So I kind of want to go. Maybe we come on a little. Dude, it's early as shit. I didn't realize this. So, I just wanted to come on for that speech. So let's do this. Let me, I think we're going to wrap up here. I will probably come on a little bit later at night. I just want to see what happens here. So I'll come on later at night. I'll let you guys know. This is early. Get ready. Go rest up. Watch the watch list if you haven't. Go show love. Go send in a prayer request. Pray. God is good, man. Stay out there. Please, actually, don't go outside, man. Just be smart. Take care of the people in your community. And just get ready and get ready for opportunity on both sides. Have no fear, baby. Walk with the Lord. That's it. So second link, nightly watch list, the main channel, baby. Don't miss the nightly watch list, the main channel. Go listen to some Uncle Answers. The code loves you. I love you. I'll see you guys tonight. If not, make sure you're on the watch list. And if not, I'll see you in the morning, baby. I love you all. God bless you. This is welcome. Welcome to history. Welcome to the 2020 election, baby.